Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
So, Emily, it's hard to believe, but it was just about a year ago at Hall of Flowers that they announced that Biden legalized cannabis. Do you remember that?
I do. And it was really funny since we had already gotten the tip that the news was coming that not, in fact, that he had he had legalized it, which would have been insane for so many reasons, but that he had in fact said that he was calling on the HHS to do a thorough review to put forward a recommendation about the scheduling of cannabis. But
That's
that was
right.
about a year ago.
A year ago. And here we are. And the number of the day is 3. and so yeah, kind of going backwards from a legal market, but to, Schedule 3. But at least it's progress, I would say. But good news, everyone. We are not going to go into it on this podcast. I think over the last week or so, there's probably been enough said. And I think that there's so much unknown that it's kind of pointless to just sit here on a soapbox and pontificate on, what this could actually mean. But I would say that, I know everyone wants descheduling, and obviously that's the best thing for the industry. I'm just happy to see some progress. This industry really needs some catalyst. I mean, we've been talking about SAFE, if you remember that, as some progress, right? As kind of toothless as that was, right? It's just like anything, and here's some progress. The industry desperately needs it. So now we got another year before it actually gets implemented.
Yeah. I mean, to your point, there's so much up in the air, and I've had so many calls with lawyers and general counsels of the big companies trying to understand the various aspects of this in terms of, the medical versus adult use designation, the tax piece, which obviously this is the thing that we've all said forever is if you remove the effective tax rate of 70+% because of 280E, these business profiles become extraordinarily interesting. And then you don't even need the safe or whatever. I can't even say the word. It's like an unsafe word for me now. But I think that you don't really need that because the businesses just start throwing off cash and they won't need a lot of the funding that would have come if they had just done their jobs a year ago, 2 years ago. Anyway, of course, now, as we've all said before, when you start applying pressure, then people have to protect their phony baloney jobs, and maybe someone will get something done in the legislative branch. But nonetheless, we say this is good news. The stocks have certainly responded. Morgan and I were just talking about it this morning. I wouldn't say they've priced in that this happens and happens quickly because we know there are many myriad of things that need to get done for this to be final call on the Schedule 3. And we also know we're heading into a election year. We're already fully in the election cycle. So there's a lot of chicanery that can go on around this. So we'll just watch it and try to get the best information we can. And I turn to the legal minds on this issue because we've endeavored into that arena at this point rather than, there's definitely politics, even though there shouldn't be because it's supposed to be a separate agency, but we know that's just not the case. So I agree with you. We will, instead of pontificating, I think we are in the wait and see, and maybe we'll get some experts on the podcast to talk about it as it develops.
Yeah. And the way it seems on places like Twitter or X or whatever, everyone seems to be an expert in this this world of like unknowns. Yeah, and there you go. Experts.
Sorry, couldn't.
Yeah.
Not.
No, it's all good.
Yeah.
It's all good. So again, we're not talking about Schedule 3, even though we've just spent a handful of minutes on it. We are talking about August, and I want to talk with you about August sales and the markets we track at Headset. Yeah, because here we are, early September. The numbers are in, and I think it's pretty interesting. So shall we dive in?
Yeah, what you are the data expert, and I'm a freak for the data. So let's talk about it.
Let's do it. So I actually want to start with Maryland. And so Maryland is a adult use market as of 2 months ago. Obviously medical before, but just for the 2 months that it's been going, it grew 5% from July to August. So about 92 million, kind of rounding there for August versus about 87 million for July. So in 1 month, we saw the market increase by 5%. And the reason why I want to call that out, well, one, it's interesting, new market. Um, the markets, I mean, that's a solid market for a 2-month-old market. And we all
Yeah.
know, obviously the medical existed for some time and they were able to kind of, flip the switch there. But, talk about posting some big numbers early on. But just remember that 5% increase, that's month over month, July to August. And what we're going to talk about here is August 23 versus August of last year for most of the markets that we cover. And then I also have some numbers on just year to date for 2023 versus year to date, or roughly the same time last year. So January through August sales of 2022. And I think these tell a pretty interesting story combined, because you can see, how's the year progressing versus how was the year progressing last year, and just how did the month do in general versus the previous month. And months, I mean, comparing month to month is great because you kind of remove some of that seasonality. Looking at August versus July in Maryland, for example, maybe there's just more tourism happening in July or in August. I don't know, right? Those things can inflate numbers when you look at month over month, but year over year, you kind of lose that. August is like August, right? So with that, we don't necessarily want to read all these numbers or talk about all these numbers because there's a lot of numbers, and I know without seeing the numbers, it can be a lot to kind of try and internalize. But I do want to call out the outliers. And so the first one on the list, August to August, the one with the highest growth would be Michigan. Michigan grew August to August at over 30%, at 31.5%. That's pretty massive, right? I don't know. When I talk about these other numbers, it really does stand out as quite an outlier. The
I
other
love
one,
it.
yeah.
To me, this is really exciting for a couple of reasons. Is that Michigan is a more competitive market in terms of brands and retail offerings.
Massively competitive.
Yeah, and so I often kind of make the joke that it is the California of the Midwest, because it is kind of like a lot of these operators have traditionally succeeded, especially the multi-state, in the markets that are a little bit less competitive and have fewer brands at the table. And so to see this kind of growth and interesting development in a state where it's like this is pretty cool. It's like, to me, a proving ground about the industry and how it can look.
Exactly. And I did think at the beginning of the year, I thought, okay, it's going to taper out, like, because we had good growth in 2022
Yeah.
in Michigan, but it continues to scale. And I know, I think it was last year where like Detroit allowed new stores to open. I didn't have time to really pull, where this growth is coming from. Is it, more access, more stores opening? Is it, I don't think prices are rising for sure. So I don't really know where the growth's coming from, but it's nice to see it continue. And I don't have the per capita numbers handy in front of me either, but it's probably getting up there with these kind of numbers.
Yeah, I mean, just like when you do see the transaction growth, though, that's pretty nice. So I know we're going to talk about that in a little bit on a whole level, but it's nice to see these increases in this market.
Yeah, and I mean, in comparison, so Michigan did $273 million in sales in August. And you compare that to California, which has a much larger population, and California had $377 million in sales. So certainly California is lagging significantly on the per capita basis. And August growth is negative for California at minus 9%. So, almost lost 10% year over year there, August. So that's not great, but they're not alone. They're also sitting with Colorado at 9.3% contraction in that market. Nevada saw some contraction at 6.6%, and Arizona at 4%. So those are the markets that kind of, pulled back.
Yep.
And then for the markets that grew, I think an interesting call out is Florida at almost 18% growth.
Yes.
And so that, I know we, in the basket analysis, we were kind of talking about it, but the patient growth was only about 15%. Patients about this time, September, the last report that they published, about 840,000 patients, and that's versus 740,000 last year. And so growing 15%, but sales have grown 17%. But baskets, and we'll get into kind of some of the basket metrics on that, like the total transaction growth, are actually a lot higher than 17% for the number of the volume of transactions that are happening. Pretty significant, but we'll save that for the basket. So remember, Florida is growing. Patient count kind of matches the August over August growth. Patients grew at 15%, Florida grew about 17%. So that's interesting. And then to round it out, Illinois and Massachusetts also saw some growth too, although smaller in the 4% range.
Yeah, right. I think, and the I couldn't help but point out the 4.2% or 420 for Illinois, because
seems fake, doesn't it?
It does. It's just, well, no, but it's also like, I feel like laws of attraction, and there it is. And we'll be in Illinois very soon, and we'll have to do another runaround of dispensaries at some point. But
sounds good to me.
Yeah, I mean, it's nice to see a market like Mass. I mean, Mass and Illinois, I mean, these are markets that have been open for a bit. And I know this is my like little soapbox thing, is the access, supply demand access. And I think there's a little bit of a tail, and especially when we get into transactions, like people shopping more, but it's accessibility too. And so more stores have been opening in these markets, not as many as, for example, in Maryland, obviously, because they went from off to on essentially as an adult use market. But it is really neat to see that when you open more spigots, that there's more volume going through these things. So, I mean, of course, there's the law of diminishing returns, which we've seen in some markets like Los Angeles or even Portland, where too many doors opened too close to each other. And that's just like traditional retail wisdom. So a little bit different.
Right. Yeah, for sure. Places like Oregon have seen some contraction. There's just maybe too much supply, price pressure, all of that stuff driving some of that.
Mm-hmm.
Yeah, so there are some silver linings. Like year to date, there are a number of markets that are growing. So Florida, Illinois, Massachusetts, Michigan, all growing. Maryland, obviously growing. But you contrast that with some of the legacy markets like Arizona, California, that have contracted. So California year to date up close to 9% too. So tracking on maybe down 10+% by the end of the year versus 2022. We'll get into baskets and all that.
Oh, sorry.
Yeah, go ahead.
No, I mean, I do think about things. I mean, as you know, we've talked a lot about the broader implications of other industries that are kind of adjacent to cannabis and what's happening in those spaces. And I went on like a little LinkedIn rant about what was happening in the wine industry, which obviously is very relevant to California, just seeing what happened in France, where they were destroying wine like Canada was destroying weed.
747's worth.
Yeah, right. Exactly. I think this was like football fields worth of wine is the way they were measuring it. But, and I think maybe they meant European football, like soccer. But, which is a bigger field. So look at me, used to date a goalie. But anyway, I think I might start digging in on some additional stuff around California economy too, as we watch, because it is our biggest market, right? As an industry, I mean, it's a lot of industry's biggest markets, but I do wonder, like, for example, gas prices are back up through the roof here in California. It's a very expensive state to live in, and there are other factors to that. So I may start running some just broader economic data analysis to this industry, so I haven't done that yet in California, but I think it's time, because when we talk about price compression, we talk about it across the board, but the consumer in California could be feeling the burn a little bit more. So with the cost of living being so high here, as a person who lives here. Anyway, that's just a sidebar. I'm going to dig in on that for future episodes.
Yeah, no, that's good. So let's move into the breakout brands. And so kind of looking at brands that had some significant sales growth, both year to date and just August over August. And all of these brands really did a great job. So just wanted to call them out and maybe add some context to some of them. So Michigan, We've got Jeter on the list.
Mm-hmm.
Year to date from last year, they did about $3 million in sales in Michigan. This year to date, and that's last year through August of 2022, to be clear. So not full year sales. This year so far through August, almost $40 million. So going from $3 million to $40 million is massive. Their growth from August to August went from about $2 million in August 2022 to $7 million in August 2023. So about 271% growth. So almost 3 times the size here. So a real standout. And I think that that fits your Michigan profile, as you're saying, the competitive landscape, California, the Midwest.
Yeah, well, and I think about maybe the consumer profile lineups. Like we talk about this when we look at different states. It's like, where can you find similar consumer segments? And Jeter is a SoCal-born brand, and then has become a force in the state, similar to Steezy. I just think it's interesting when you look at that they like hopscotched over to Michigan, and I think they did a very intelligent job of identifying a market where they would also play well. And this is like when you build brands, you identify consumer segments and connect the dots. And so look at this. I mean, that's product market fit.
Yeah, huge. Next on the list in Massachusetts, we've got Simply Herb. Simply Herb went from August to August. August of last year did about $800,000 in sales, and August of this year did over $5 million at $5.2 million.
Bam.
So that's a 5.5x increase, over 500% increase, and that's Simply Herb, and that comes at you from Ascend Wellness, right?
Mm-hmm. Yeah. Yeah, our friend Maggie actually created the branding, or did the branding around it. She's been on the podcast. She's now at Garden Society. But the thing I think that's so, again, like thinking about the consumer and the time, and we're obviously all watching the data coming out of, with the Fed and everything. This is a value brand. And this is where you have different brand strategies. And I think it's really smart for the MSOs or any vertical operator, or any operator actually, to have different tiers of pricing and different kind of ethos around the brands. And Simply Herb is just that. It's Simply Herb. And they keep it straightforward and price sensitive. And it seems to be getting real traction. I think it's clearly hitting on where the consumer is right now.
Yeah, that's huge. $5 million in sales for that brand. Massachusetts as a whole in August did $136 million. So what is that? 5 on 136. That's almost 4% of the market. So huge, and massive growth from last year. So it sounds like they're onto something there. Mm-hmm. Next, well, let's keep it in Massachusetts since we're still in Massachusetts. Kiva did really well. Kiva, you see them in a lot of places, a lot of states outside of California now. But Massachusetts, they've seen some really good growth. They went from last year 1.4 million to 2.5 million. So about 75% growth, give or take, there. So good to see them, continuing to move up the charts. That's brands like Camino under their profile there. So a lot of edibles.
They're a classic.
They're a classic. They've been around on this list probably longer than most.
I think that a lot of the brands on this list owe a tip of the hat to them for kind of defining that this was a consumer brand category. I'll just say that.
Yeah, totally. Next, let's move to Colorado. So Colorado, even though Colorado is had a really tough August, down 9% versus the previous August, we do see a breakout brand in seed and strain cannabis. They went from 1 million last year in August to 4.7 million in August. So that's 350% growth. Year to date last year, they did about 4 million, and year to date this year, about 21 million. So that's almost 500% growth. So they had a lot of growth. Maybe they came in a little late in 2022, or we're just getting started, but huge. And this is actually, I believe, a Columbia Care brand. Mm-hmm. And yeah, they I don't know when they announced it. I've got the press release. So yeah, May of 2022, they came into Colorado.
Yep.
So great to see, yeah, that kind of growth coming from a market that, had a tough August. Um,
Yeah.
they really are beating the market on that.
Yeah, I mean, this is where you have to dig in to the next layer of information to understand that there is still growth that is attainable in these markets where they're seeing some contraction.
That's a great point, right? We talk about top line a lot, and people look at top line. A lot of states will report, their tax revenue or what the cannabis market did, and you'll see down 9%. But there are stories in these markets, where people are seeing some real success, and so yeah, this is a good example of that. Yeah, just double clicking in, right, one
Yeah.
layer down.
Right. And that's like, I mean, I'll just say this, that's where the job is of the investor base and of companies that are looking to acquire or build things. It's digging into the next layer of data to understand, because the top line doesn't tell you the story. I don't, well, yeah.
Yeah, I mean, to see a brand grow 350% in the same time period that the market contracted by 9%. I mean,
Exactly.
yeah, there's a lot to look into, right? On like,
Mhm.
where's that market share? Who are they taking it from, and what's comprising, the Seed and Strain brand to be so successful in a market like Colorado. But pretty exciting nonetheless. Moving off of Colorado, just wanted to call out Washington here, and maybe these are maybe the last ones on our breakout brand list that we'll cover, unless you want to hit on any of these others. But okay, so Washington had a really interesting one with the brand Microbar. And so Microbar had no sales last year. So I think when you divide by 0, it's infinite growth. But this year to date, they've done almost $20 million in sales. Year to date, or sorry, August of 2023, they did about 3.1 million in sales. And that's massive. So just to kind of give you a sense of the scale of Washington in August, did about $106 million in total sales. So they did this new product did about 3 of that 106. So I don't know, a fair percentage there, 3% of the market for a brand new brand. So it's like, who's this Microbar? And I assumed it was an edible when I looked it up, but it's actually a vape, disposable vape in the form of, I believe it's called Elfbar.
Mhm.
Yeah, is that right? It used to be all the Juul stuff on the nicotine vapes, and then now it's these disposable ones that are more rectangular in shape. It seem to be all the rage, and so it looks very much like one of those. So I think that there's some crossover, right? So the audience that might be used to purchasing Elf bars is looking at a microbar and saying, okay, it's similar format. I think it's priced pretty low for a single gram disposable vape, and it's racing up the charts. It's, I think, certainly in the top 5 of brands, and that's, Washington's been around as long as Colorado, more or less. I think by like 6 months, right? So to see a brand go from 0 to like the top 5 in 1 year is insane, and just makes me think that if they're able to do that in Washington, where is this brand in all these other markets, right? Or something similar.
Yeah, I mean, I think that's the other theme. It's again like digging in, and like if you have an opportunity to launch something in a market, just because a market's been having a challenge doesn't mean that every single category, every single type of product is having a challenge. And it's about, this is the thing that drives me nuts, is like oh man, I was just watching The Big Short last night, and there's this whole like mental fallacy where you like follow the crowd because like something was winning, everything will win. And it's just not the way it is. And sometimes you have to look, well, you always have to look at the white space. And maybe the white space is white for a reason, because it's like there's no interest there, there's no product market fit. But sometimes you found something that not everybody, that consensus hasn't agreed on. And it's like white space where you can play until people crowd in. Like Wana was a good example of that with gummies, and now gummies is super competitive. And if you can figure out how to kind of nail it on this is where, again, another little soapbox thing I have is like, this industry, if capital could flow into it, we could invest more into product development, we could invest more into consumer marketing, and we could actually see these things gain traction and flourish and drive more TAM, frankly. But anyway, I love to see things like this because fortune favors the bold sometimes, and jumping in on a market that looks like that isn't always it's kind of a contrarian way to approach things.
Yeah, and it seems to be working for this micro bar
Exactly.
in a meaningful way. And you mentioned gummies. Wild here in Washington, the
Hmm.
last one in Washington, grew doubled their sales. So they went from 1.2 to 2.7 in August. And Wild is a good example of that, kind of running up the charts, from Oregon where they started, and then
Hmm.
pushing these other markets. They're in probably more markets in a meaningful way than most brands.
Oh yeah,
Yeah, it's pretty
and they kill
amazing, and
it.
they do really well for where they're at. Although in Washington now, Microbar has surpassed them in August as
Yep.
far as sales. So
But
and year to
microbar
date
is kind
sales,
of playing a different angle.
totally different
Yeah.
angle. Exactly, totally different category.
Yeah.
But yeah, just really interesting to see. So
Yeah, Wild just launched in Missouri this week too. They really
oh,
go
good.
for it.
And we'll
Yeah,
have
yeah.
that. Yeah, we'll probably have that for our September wrap up.
Bingo.
Yeah, that'll be
Bingo.
interesting to see how they're doing there.
Yeah, I think, they have done a great job because they kind of created their own. I talked about this was in that Will Yakowitz article about it, but they kind of created their own take on gummies because they had created this the kind of more bespoke flavors and packaging and the way that they do it. But that is one of those brands that I hear from bud tenders in different markets that people come in and ask for, which is like that's the holy grail on being a brand. It's
Yeah, and it's
pretty
rare.
impressive. It's
Yeah, in
so
this
rare.
category, it's so
Yeah.
rare. 'Cause marketing's so tough, but I think it's a great example. And like if they are in more states, it's just more exposure, right?
Right.
It's so fragmented. But if you know someone in a legal market, and then you're in Missouri, and now it's legal, and they're here, and you knew someone in California or Oregon or Washington or wherever Wild was sold, they might have mentioned it, and now you can get it, right? And so
Mhm.
that's building a brand. So cool to see it starting to happen with some groups. And it's not always, successful. There's so many nuances to, how these brands roll out, and, who they're partnered with, or how much they're investing. And we've seen some that just haven't translated as well. So anyways, good to see them, still doing their thing here in Washington. So that's it for the breakout brands. I do want to call out Maryland again, just because it's so interesting. The data is so new. And a month over month, again, I can't look at August versus August because it's apples and oranges with the medical, but just kind of looking at where we're at with the brand profile. And that was interesting about Maryland was the top 5 brands, excluding house brand, which is just products that are sold at, vertically integrated companies' own retail, like taking
Mhm.
that out and just looking at the wholesale landscape. The top 5 brands on here take over 50% of the market. And those brands we had for August are SunMed, Curio Wellness, District Cannabis, and Strain. Is that 4? That's 4. And
Yeah.
G Leaf after that. So yeah, something like 55% of the market just of the top 5 brands, which is crazy. But this is a new market, right? I mean, new adult use market. So there's lots. This is going to
Mhm.
move a lot. But in that list, Strain, which is STRANE, and I believe they're available outside of Maryland in places like, I think, Michigan and some other states. They raced up from July. They went up 9 positions
Mm.
from where they were. So they were ranked, I think, 14th, and now they're ranked 5th, which is pretty huge to see. So this will move a lot. If we look at this in September, I guarantee you we're going to see even more movement. Just
Oh yeah.
it's a new market, right? That always happens.
Absolutely.
Cool. So do you want to talk about, I mean, are there any top brands in the top 10 lists that you wanted to cover on here? Any like outliers that you noticed that you think would be worth discussing? So we're looking at, basically all the top brands by dollar sales, and, how they performed in August and how they performed year to date versus the same time period last year. But anybody on this list, Emily?
No, I mean, it was interesting to see some of the notable moves of some of the brands. And I mean, I know we talked about how some of them had moved quite up, but then some had also fallen pretty far down. And so I'm going to be
Yeah.
watching. I'm going to hold comments on that for this moment. But I'm going to be watching to see if that continues in September because that that's when you start to see what happens. Like maybe August was a blip for a couple of those brands, and maybe like they were missing, they weren't being on the shelves because they had a supply issue or something on the back end. But very curious to see where they kind of land in September. So I'm glad we're doing this rundown, and I think we should do this every month. If people
Yeah,
like it.
and this
Yeah.
stuff, is all in headset, so
Yep.
subscribers can get this for sure if they're curious about these markets and these metrics. But I think in general, yeah, we don't necessarily want to talk about kind of the losers on this list here, the groups that are that are falling. And it sounds so harsh, right?
Yeah.
But there are some, like in Illinois, when you look at this top 10 list,
Yeah.
most of the top 10 have lost significant or have grown a negative growth versus the market growth. So market grew, 420, as you mentioned, in Illinois, August to August, and most of these guys completely underperformed that on this
Yeah.
top 10 list. So if at this pace, it's not going to be top 10 for long, if that's the case. Well, we won't name names here, but just kind of interesting to see. Not all of them.
Yeah.
There were some that grew
Yeah.
for sure.
Yeah, like that's a good point. Like again, like another Ozone is another Ascend brand that showed some nice growth that kind of outpaced the market change there. And then, or well, not, but it ran ahead of the other top tens here. And then and Shine, which is the right, that's and Shine,
Yep,
yeah,
that's and Shine, and that's GTI's
GTI,
brand, right?
yeah.
Rise and Shine.
Yeah, right. Yep, exactly. And so that one showed some nice growth. That was almost 10% or
Yep.
9.76 really. And so again, like super curious when you see these kind of things pop up or pop down and significantly different than the pure set. It's like I'm very curious to see if this is a trend versus an outlier, kind of a month or an event where things were on shelves or whatever was happening. So I'm gonna keep watching these things. I love being able to track it.
Yeah, in some of these markets, like Illinois, we report wholesale, and I know there's a lot of vertical integration,
Yep.
so that's some nuance there too. But yeah, and Shine is a good example of growth. And yeah, you mentioned 10%. That's the differential because they grew about 14%, but
Differential.
the market grew 4%, right? So they beat the market by 10%. So there already was some growth baked in.
Yep.
And the differential, this idea of if the market grew 4.2% and you as a brand grew 4.2%, you're just in line with the market, right? It's kind of like
Right.
inflation. Like you're just keeping your head above water. But if you beat that, then you're growing, and
Yep.
especially if you beat it and it's negative growth, like what we saw with Seed and Strain in Colorado, for example.
Right.
And there's a lot in Colorado that had a significant market differential. So Seed and Strain's not the only one, right?
Yeah.
Green Label, Dialed In are all on this list with some
Yeah.
significant growth. Wild continues to have significant growth in places like Colorado. So yeah, lots of winners and some not winners. Is that better than losers?
Yeah. Yeah. Not. Yeah. Yeah. No, I think that's a good point, and thank you for clarifying. I meant to say the differential, but it's interesting too because some of these, like just to call out a state where the top brands did quite outperform the market. Uh, it was a good market for those top brands to kind of run ahead. Anyway, the
Yeah,
differential is really interesting because it does kind of tell the story of what's happening more on the brand level than on the market level.
right. So let's close it out with baskets and this idea of transactions, because it is like the one way to look at what's kind of going on underneath. And
Mhm.
like we mentioned, some markets were growing. Markets like Illinois saw some growth August to August. Who else was on the growth list? Massachusetts, Michigan, obviously, Florida, right? So let's take Florida for example. So Florida grew 17% August to August, but when we look at baskets, right? Baskets, the size of the basket in Florida was down 12%. And so that you can think about the receipt, right? If you looked at a receipt from August last year, maybe it was $100. Don't take that literally. It wasn't $100. It was actually $85. I guess I could just use the real numbers, right? So $85.93. And then this year it's $75, right? So that same receipt is lower. Like it may have different products. Products may be priced differently. Products may be promoted differently. which is a big narrative in Florida.
Yep.
But Florida's seeing growth, but the basket size itself is lower by over 10%. And then you've got total transactions are up 33% or almost 34%, which is huge. So you're seeing more transactions happening.
Yep.
You're seeing those same transactions come in at a lower dollar amount at $75 on average in August. At the same time, you're seeing average item price down 8%. So that, as I mentioned earlier, the patient count is about 15% growth. So the patient count alone doesn't account for this total transaction growth. It's not that there's 15% new patients and there's 15% more transactions. So what that points to is just those patients purchasing more or driving more transactions. And there's a couple of factors to that, right?
Yep.
Yeah. So that would be things like more stores,
More
as
stores.
you mentioned, right? More stores are opening, so better access, maybe cheaper prices. They're coming back. Maybe they're coming back and buying more frequently. So the basket's a little lower. So maybe they come back, a couple more times than they usually do. There's all sorts of factors into that. But if the basket size wasn't going down, the average item price wasn't going down, and they had this kind of transaction growth, I mean, we'd see even more growth out of that market, right? Instead of 15-ish%, it'd be, closer to this 30%. So, it's getting dragged down a bit, and we know promotion's a big reason for that, right? Everything's on sale in Florida all the time, and it really is an outlier compared to other markets. So, anyway, it's just something to be cognizant of. But when
I
we look
think
at, go ahead.
mean, just to share, I mean, again, it's the access story, but I also think like there's a really nice consumer base in Florida, and it just shows the potential. And that's still limited to your point about like the medical cards. And then I just realized too that Hurricane Idalia landed on Wednesday, August 30th. So it did impact the last day of business in Florida, because even though where it landed is not as heavily populated area, there were stores that closed in advance of that, like nearby in like Tampa, et cetera, because of didn't want people on the roads and, doing things like that and keeping
Totally.
patients safe. So, I don't know how many total stores were closed, but, as you watch a state like Florida through hurricane season and know that these things happen, it's just interesting to think that on a Wednesday, more stores were not open. So I don't know if people stocked up in advance, which, we do know people do that, like with toilet paper and other things, but water.
Totally. That's a
Water
great
we
call out. When we look at months at Headset, I mean, you will notice like when you have a month with less days, it does impact sales, right? If you have one less day, like if it's a 30-day month versus a 31-day month, that's like a 3% difference
right.
right off the bat. And then markets like or months like February even more significant. So if a
Mhm.
hurricane's hitting a state and they're shutting things down or people are just staying inside, it's going to have an impact. So
Mhm.
yeah,
Mhm. Mhm.
great call there for August. So I guess the short of it is baskets are down, basket sizes are down everywhere, right? In places like Florida, pretty significant with 12%, but it's not the worst one. Massachusetts down 18.5% in the rounding there.
Mhm.
So yeah, that's getting smaller. That went from $66 to $54. That's kind of getting into California territory, which is about $48 on a basket. Um, but not as low as places like Oregon, which is about $36 on a basket. So basket sizes are down. Transaction growth is all up, with maybe the exception of Nevada in August. So that's good, right? More purchases are happening,
Mhm.
but those purchases are, at a smaller dollar amount. And then average item price is like baskets. Everything is just going down. Everything's getting cheaper. Even markets like Oregon, even markets like Washington, where
Mhm.
your average item price is already so low, it's down 4% August versus August in
Mhm.
Oregon and in Washington. So again, it's if pricing continues to drop, basket size goes down, but it's offset by just more transactions, more access, and certainly that's growing in certain places. And I should say this does not hold for Maryland. Maryland is the outlier. Maryland is the one place where average item price actually went up in August. That's actually looking, that's looking at August to August.
Mhm.
So medical. So they're charging a little more. I think these things will balance out, right? It's a new market, supply and
Yeah.
demand, but
Hmm.
yeah, that is kind of an outlier there. So, anyways,
Yep.
that's the narrative. I mean, what's the big takeaway here? I mean, there's a lot of numbers, and if anybody's still with us, um, how do we wrap it up, right? What would you say?
I mean, to me, this is just like a mature. This is a market that is showing that it is maturing, and so you have we've always looked at, to your point, the headline data of state to state, which is great. It's a great indicator of what's happening. But I think the parts where I think things get really, really interesting is when you drill in and you do try to understand where brands are landing on this, both from the vertically integrated operators through to the brands like the Jeters, the Wilds, the Steez. Well, Steezy's vertical, but these different types of companies. And then, for me, I think the next step, just where my curiosity of mind goes, is what is happening in the product mix in the baskets, and then thinking about the gross margins of those things and the attributes of those. And to me, and then understanding where the white space still is on the bell curve of the consumer base in these markets, because the way I always think about this is like the market opens, it's almost like you land and then you expand. And when you land, it's the tip of the spear of the passionate consumer base who's already bought in on cannabis. And then you expand to the canna curious. And that's where the investment in products and marketing and sophisticated consumer product development comes into play. And I just get excited when I dig into these numbers under the layers of some of the headline numbers, which on the face of it could be perceived as disconcerting. I still think there's tremendous opportunity. I think the story of Microbar in Washington State is a great example of that. Or what was it, Seed and Strain in Colorado, exactly. So if you just have to look a little closer, and that's the deal. What do you think?
Yeah, I think I'm with you. It's like I think looking beyond the month versus a year ago, top level numbers, and drilling into what that means. So there are opportunities in these mature markets for brands. I think that's a big takeaway here. I think, obviously continuing to see some of the declines in top level and driven by things like, average basket going down, average item price kind of driving some of that. I mean, there could just be general market forces, broader, like people are just, spending more elsewhere because everything's getting so expensive, like, hard to say, but I think it's interesting to kind of see that. But at the same time, we're seeing more and more transactions happen in every market. So transaction count has grown. I think that just points to more people coming into the category, those people that are in the category purchasing more in the legal channel or more access, or some combination of all of that. So I think that's the big takeaway for me. Also, I mean, just looking at these numbers and thinking about things like 280E and thinking about what Schedule 3 could mean, from a margin and taxation perspective, I think, for all this money, this is all coming from retail, right? So all this money is going through retailers, and once they can deduct those expenses, I feel like there's going to be a lot of cash available to spend on other things. So that's also a silver lining, right? Knowing that that's coming, and knowing that, these are pretty big numbers in a lot of markets, and many markets like Michigan, Massachusetts, Illinois, continuing to grow. Maryland, brand new, growing. I think that the future is still pretty bright on a lot of levels. So yeah, lots to drill in. It's always hard to pick, and always hard to figure out, the best narrative. But I think this is an interesting way to look at it. And maybe we should do this every month.
I think so.
Yeah, awesome. Well, until next time, I do want to shout out that we're going to be at Benzinga in Chicago this month. So if you're around and you see us, give us a shout. And yeah, excited. It's always a great time.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.